Let's now turn to the advisory and get some changes to the home guarantee scheme that take effect as of the beginning of October. James Gerrard is joining us from Financial Advisor. James, welcome.
Thank you, Andrew. Thanks for having me.
So the home guarantee scheme, now this has already been in place. How many home buyers has actually helped out? Because it's capped, isn't it?
It is. There is a cap every year, but so far it's helped 230,000 Australians, and this is a mix of first home buyers and single parents, get into the property market where they otherwise wouldn't have been able to. So it's been a fantastic scheme from the Albanese government.
So is that cap now being lifted come October 1st?
It is, yeah. There's a couple of changes. One of the biggest ones is that cap will be removed. So no longer will there be a limit. So anybody who wants to apply that meets other eligibility criteria, they'll be able to get in there and go for this.
All right, regardless of your income, what are the other changes?
Yeah, so there are other changes as well. So at the moment, if you're a single person and you apply, your income needs to be less than 125,000, and if you're a part of a couple, your income needs to be less than 200,000. But from 1st of October, that changes. So that income cap is being removed as well. So that's another big change. So in simple terms, it doesn't matter if you make $50,000 a year income or $500,000 a year income, you're going to be eligible for either the 5% one, but the 2% one for single parents, the 2% deposit scheme is not changing. So that's an important clarification that from 1st of October, it's only the scheme that where people haven't bought a property before and they want to get into the property market, they only need a 5% deposit. The guarantee will be from the government for the rest of the deposit, but the income doesn't matter. So they can earn what they want with taxable income.
All right, James, let's look at the implications. Certainly from the individual buyer's point of view, is there a risk perhaps that they'll find themselves in trouble, overextend themselves, obviously with a very low deposit, or will that be thrown back to, I guess, the lenders who need to be a little more cognizant of that? Yeah,
it's something that people who are entering the property market really need to think about because these borrowers are going in on really wafer-thin deposits. They have 2% if they're a single parent, 5% if they're a first home buyer. And property markets, although over a 10-year period in Australia over the past 50 years, they've tend to gone up, but there are periods where we see decreases in the property market. So even though interest rates are on the way down, but if we see a drop in the property markets and times turn bad economically, people may lose their jobs, property prices may go down. We could very easily see a situation where literally hundreds of thousands of Australians that have been helped into the property market by the federal government now have negative equity. And so that's a situation where their loan balances are actually higher than the value of their properties. So although it's a great thing having this scheme, people need to be really careful about how they get into it.
But of course, many are forecasting the opposite is likely to occur, that this is going to fuel property prices because many more people at the lower end are going to be piling in, forcing those prices higher.
Absolutely, I agree with that totally. So I look at the simple economics of it. We have supply, which is more or less the same. It's not changing dramatically, but we have more demand, more young people, more single parents are coming into the market. And, the numbers speak for themselves, 230,000 over the past couple of years. These are people that have been renting that are now in the market because of the government intervention. And with these changes from 1st of October, it sort of turbocharges that whole scheme. So we're likely to see an influx of first home buyers into the market in the lower end, because another change as well is that the price caps are changing. So to be eligible under the scheme, you need to purchase a property for up to a certain amount. So at the moment, for Sydney, for example, you can buy a property up to $900,000, but from 1st of October, that increases up to $1.5 million. So more people will be able to buy higher value properties under the scheme from 1st of October.
So, potentially making affordability even more difficult. What's your advice to clients?
Yeah, so look, people need to think about their own situation. It's a very serious thing buying a property. It's a large responsibility. It's generally there for 20 or 30 years. But on the other hand, it's very aspirational. Australians like to try and own their own property, sort of that, put a nail in the wall and put a painting up. So it is a good thing to do, I think, financially, because you have that security of being in your own place. And although history is not a guide to the future, if you do look at property prices, they tend to go up. So the Sydney property price average growth has been about 7% for the past 30 years, and Melbourne's been slightly lower than that, but similar. So if people, it's really hard these days to actually get a property because cost of living is so high and it's hard to save a deposit. So people in their 20s and 30s may not ever be able to buy a property when you look at the average income of $100,000 versus $1.5 million for the average house in Sydney, and a bit less than that in Canberra, Melbourne and Brisbane. So I think it's great, but you need to be careful because, as I mentioned, if times turn bad, you lose your job, interest rates go up eventually, although they're likely to keep going down, eventually they will bottom out and go back up. people need to think about the long term, not just getting into the market right now.
Given rates are falling though, what is your advice and what are you hearing from your clients as to whether perhaps there's some urgency to get in there before prices really take off?
Yeah, I am. And it's not just from the first home buyers, it's all clients. It's people with existing properties who are looking to upgrade, investors as well who are looking to buy an investment property. They're seeing a couple of things happening. They're seeing this change from 1 October that's likely to add a lot of fuel to the fire of the property market and push prices up. But we also have the backdrop of the RBA reducing the cash rate, and share markets predicting one more rate cut later this year and then maybe another one sort of February, March next year. So rates are still on the way down, which will even further boost the confidence for people to jump into the property market. So I'm feeling that sort of fear of missing out starting to come into it. And when you look at the property data, we're starting to see more activity there with regards to prices increasing on a monthly basis, auction clearance rates being pretty healthy. So I think it's actually going to be a bumper summer period for the property market all around the country.